Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very nice weekend and a very good day of trading as well. And in today's markets, guys, well, it was an extremely volatile day, as have many days have been in the last 30-day period. Now, today was a bit of a topsy-turvy day. We started off the morning very bright red, almost down 2% on the SPY and the QQQ in the aftermath of the sell-off of the Trump tariffs placed on Mexico, Canada, and China over the course of the weekend. Now, that was all quickly reversed intraday, as one after the other, each of those respective three countries came to formal agreements with President Trump. Canada and Mexico agreeing to reinforce their border, and China being open to discussions later on in the week. So as a whole, guys, tariffs have now been delayed 30 days. Was it a calculated risk, a negotiation tactic, or just playing with fire? I will let you decide, but overall the markets have had a decent recovery after that. So in today's video, guys, we got a lot of things to talk about, of course. Number one, we're going to be going over the temporary tariff resolution. Number two, we're going to be taking a look at one company earnings that have earnings today, and they did okay, let's call it Palantir after the close up. Just a cool 23%, nothing more than that. They did pretty much okay, right? So we'll take a look at Palantir and see how badly they crushed their earnings numbers. Thereafter, we'll take a look at the technical analysis on our major market indexes, see how we stand after today's very big volatile day, and then thereafter take a look at our big tech names, because a few of them have earnings this week as well. We'll take a look at the tech landscape and how it's shaping up into those earnings. And lastly, take a quick glimpse into my portfolio for a few of the trades made today and what I have remaining for the rest of the week. Suffice to say, guys, this morning early was a very decent buying opportunity, especially if you listened to my top 5 options play video yesterday. Almost all of those plays came alive at some point in the morning and offered us some very attractive strike prices well below the market. So it was a nice opportunity to go shopping. I went shopping, but a little bit lighter just because I'm saving some buying power for the earnings plays to come, but we'll show you that at the end of the video. So without further ado, let's get right into it, shall we? So the SPY down about 0.67, the Q's down about 0.8. They were not able to claw back all of the losses, but a decent portion of the losses to say the least. Take a look at the heat map right here, and you will see that big tech were some of the ones that were the worst affected. Tesla down 5, auto manufacturers definitely do not like the tariffs. Apple was down 3.4, continuation down from their earnings. Semiconductors getting caught up in the mix. Microsoft, Google, only Meta coming in with a 1.2% gain. Financials, somewhat mixed. The banks were down, but they were down a lot more this morning before recovering. Credit cards were doing well. Healthcare was surprisingly doing well. Consumer defensives really coming alive. Walmart and Costco carrying that whole sector on their backs. And the bottom half of the market here, industrials, real estate, utilities, and whatnot, they were all fairly mixed. So overall, it could have been a lot worse of a day, but today actually ended up not too bad. We will see. There's a very long week of trading and many more macro catalysts, earnings catalysts, and maybe more tariff talks as well. So we will take this one day at a time, as we always do on the channel. Take a look at the one day relative here, and you will see that although there were a few sectors that were green, they were not very green. Most of the damage was done to the downside, of course. Technology, consumer cyclical, industrials, financials getting hit a little bit hard. On the 1 week relative, where do we stand after this very volatile last week with big tech earnings, with Jerome Powell, with everything else in between, the tariffs? Well, only 3 sectors remain green. Communication services, which is largely Google and Meta, let's be honest. Utilities and technology. Everything else still struggling to the downside. So before we get into more technical analysis, guys, and go into more sector rotation, let us take a look at exactly what happened in terms of the tariff resolution. So if you watched my video on Saturday, we did a 15-20 minute segment as to what were the implications of the tariffs, which sectors of the market they could possibly affect the most. And now, only 2 days later, those tariffs are being delayed by 30 days until March the 1st for Mexico and for Canada as well. Ongoing discussions with China will be had over the course of the week. So we'll be curious to see as per whether or not there's going to be some delays in tariffs there, whether they're going to be localized tariffs on only certain products or more broad tariffs for China. So China, still a little bit of an X factor, but at least we have some common ground here for Mexico and Canada. Trump pauses tariffs on Canada imports for 30 days. After doing the same for Mexico. So the Mexican president this morning came out and said that they were going to reinforce the border with around 10,000 troops of their special forces unit to really bring security and safety to the border. I'll remind you guys that Trump's conditions for lifting these tariffs are all about border security. Yes, he had also mentioned about the trade deficits, but largely President Trump was fairly clear on saying that the formal demands, the primary demands, all had to do with border security. And he reinforced that yesterday when retorting to Canadian Prime Minister Justin Trudeau, reiterating the fact that this is not Trump looking to get into a trade war. It is a war against crime, essentially. Now, take from that what you will, but those are the official statements, of course. So, I won't read you the article, but all you need to know is Mexico was this morning, and then late this afternoon, Trump had a phone call with Prime Minister Justin Trudeau, and the tariffs were lifted as well. Justin Trudeau, formally gave him his plan as to committing $1.3 billion to border security, more helicopters, more border guards, and more sophisticated technology to crack down on illegal immigration and the illegal migration of drugs across the borders here. And that's pretty much it. Canada's implementing the $1.3 billion border plan, reinforcing the border with choppers, technology, personnel, enhanced coordination with the American partners, and increased resources to stop the flow of fentanyl. Also naming a fentanyl czar in Canada here, whose only job will to be cracking down on fentanyl. Now, this plan is not new. This plan was put forth in December after Trump was elected in the first place, but now at least the two had a phone call together. That is the first formal phone call they've had since the moment of the election. So now the plans are clearly defined, and the tariffs have been delayed for approximately another 4 weeks of time until the early stages of March, at which point they will be reevaluated. So the tariffs off the table. And as I was saying in the introduction, guys, is Trump playing with fire? Is it a very hard negotiation tactic? Right? Is it political bullying? Well, I'll let you be the decider of that factor. I'm not going to comment on the political landscape. We are just here to make money in the markets and see which sectors can possibly be most affected by those tariffs. All right. And I did that on the Saturday session. So if you didn't have a chance to check that out and see which sectors I am favoring over the next maybe, 2, 3, 4, 5 weeks of time where we're in this kind of tariff limbo, you should definitely check that video on Saturday out. The first 15 minutes makes it pretty clear which sectors of the market I will be attacking when tariffs are front and center and one of the main risks to the market moving forward in the next 3, 4, 5 weeks. So that is everything about the Trump tariffs and the resolutions that were came to together today with Canada, Mexico, and the United States. Now, moving forward, we have to talk about the elephant in the room, which is, of course, the PLTR earnings. So Palantir in the after hours right now sitting at $103, up 22%. And guys, they absolutely crushed it. I mean, I have to give praise where praise is due, and Palantir absolutely crushed it. Leading into these earnings, I was saying that the revenue growth metric is going to be front and center, because when you're trading at excessively rich valuations, you need to show the market that you're able to grow revenue and EPS at staggering numbers if you want Wall Street to be able to give you the current valuation that the stock sits at right now. I'm all for a very good growth story, guys, but a good growth story has to be backed up by extremely strong numbers and ever increasing numbers. And so far over the last few quarters, Palantir is showing us that yes, they do mean business. The numbers are real and the numbers are expanding in a very beautiful way. So let's move into this. I'm very happy as a Palantir shareholder myself. Cannot be happier, but I will not lie. I will be selling some shares up here. As I was saying, guys, I had a big position down here at about the $11, $12 range that I accumulated for a very long time. I sold out of the 1,800 shares that I have in my retirement account or my tax-free savings account. You guys in the States call it an IRA. So I sold half in the mid 40s, about 49, and I've held the rest up until now. Now is going to be a time where I do sell a little bit more of those shares, and I just look to kind of scale out of this position in which I'm up a fairly decent amount of money because the valuation right now is a little bit stretched. So when that's the case, I'm not saying it cannot go higher. I'm not selling the entire position. I am just going to trim the position and lock in some well-deserved profits. So let's go into the article, shall we? Palantir shares rocket 22% after the company posts a strong earnings outlook. And strong out in the earnings outlook it was. This quarter, at least, they beat on EPS by 26% and a beat on revenue by 6.5%. So I'll go through a few of the quotes from Palantir today, and then we're going to take a look at their actual earnings slides for the numbers. So the company said that it expects revenue of between 858 and 862, which was ahead of the estimate of 799. That is a very nice beat, guys, almost a 7% beat on first quarter guidance. So very, very, very strong here, guys. For the full year, Palantir forecasts sales of 3.74 to 3.76 billion, topping the 3.52 estimate. So another 5-6% beat on guidance for the entire year. Number one, they crushed this current quarter. Number two, they absolutely as Alex Karp said, eviscerated their guidance. Now, moving forward, our business results continue to astound, demonstrating our deepening position at the center of the AI revolution. Our early insights surrounding the commoditization of large language models have evolved from theory to fact. And we've been talking about this since the DeepSeek event, how the large language models will be commoditized. However, even though everybody's going to have one, you still want the best. And arguably Palantir, in their specific niche of what they do in terms of enterprise resource optimization, they are, bar none, the best in the game. Moving on further, revenue increased 36% in the quarter. That is staggering, guys, year over year. For the full year, sales increased 29%, which is roughly how much they've been increasing all throughout the year, quarter over quarter. You've been seeing minimum 30% gains. Karp said in a letter to shareholders that the momentum the company is experiencing across its commercial and government segments is unlike anything that has come before. We are still in the earliest stages, the beginning of the first act of a revolution that will play out over years and decades. Sounds like Jensen Huang. They've been preparing for this moment diligently for more than 20 years. This is true, guys. Palantir is an old company. Karp said that Palantir is poised to lead the transformation of American companies, and he asserted that bolstering the US is its primary objective. So Palantir is a very beautiful company to have, guys, not only for the expansion of enterprise optimization for various United States companies and worldwide companies, but also because they are very closely intertwined with the US military. Palantir has some of the most advanced AI software of any military complex in the entire world, and you do want to see that in the US's hands. So extremely good quotes and statements from the CEO. Now let's see if the numbers back it up. And quick little hint, guys, the numbers do definitely back it up. So let's move all the way back here and I'll show you guys what I mean of how outstanding these earnings actually were. Let me just move this over again. My bad. Okay. So in terms of the numbers here, guys, fantastic. This is Q4 highlights. We're going to go through them very briefly. US revenue grew 52% year over year. Substantial. Commercial revenue on its own, 64%. A lot of people a few short years ago said, well, Palantir is not able to get any commercial contracts. They only have government contracts. This is now flipping very quickly. Government revenue up 45% year over year. That is fantastic. And overall revenue, not just the US, grew 36% year over year. Extremely strong. Now they closed 129 deals of at least $1 million, 58 deals of $5 million, and 32 deals of at least $10 million. So they have everything across the pipeline, whether it's a small, medium, or even large enterprise. Adjusted free cash flow, guys, of $517 million for the quarter. That is absolutely fantastic. That is for the quarter. Now for the full year highlights, we already went over them a little bit, but the US revenue 38%, commercial revenue 54% year over year, government revenue 30% year over year, overall revenue 29%, extremely strong. Customer count increased 43% year over year, up to 711 from 497. That is fantastic growth. Palantir is hitting their exponential growth curve right now, and there's so many more companies that they can do business with, guys, in the thousands potentially, right? So still at the very beginning of what they can possibly do. Adjusted free cash flow of 1.25 billion. That is very good for the size, for the amount of revenue that Palantir is bringing in right now, which is about 3.5 billion per year. The fact that they can bring 1.25 billion in free cash flow shows that the company benefits from operating leverage. As they scale revenue, the expenses are going up less quickly as well. They are improving their net margins. And what are they doing with those net margins? They're stacking up that free cash flow and building those cash reserves up to now 5.2 billion in cash reserves. Extremely good to say the least, guys. Now, the benefit of Palantir, guys, if you want to know what is Palantir's actual competitive advantage, well, yes, they have one of the most powerful AI suites on the planet, both for enterprise productivity, but also for military and government applications too, in terms of having security surrounding your information as well, right? However, that arguably is not their competitive advantage. There are tons of different companies that operate in the landscape of rendering other corporations more efficient through the implementation of various business practices or softwares, right? That is not their competitive advantage. The competitive advantage that Palantir has, in my opinion, yes, they have very good technology, but it is the client experience that sets them apart from the rest. Everything from their boot camps to end, really hand-holding with their end clients, making sure that their clients are able to implement their software to the degree that Palantir thinks that they can implement it, right? Because it's one thing just selling somebody a piece of software and say, here you go, this will make your company better. But Palantir works extremely closely with these clients and companies, does boot camps with their entire engineering divisions to teach them the software, teach them how it can be integrated in these companies' databases and whatnot, and helps them optimize all throughout. So it's really a hand-holding experience from front to back. And I'm telling you guys, there is not many other enterprise resource businesses out there that give this same level of client experience. That is truly the niche competitive advantage that Palantir is having right now, which is why clients like working with them so much and why this company has such a high retention rate and why more and more clients are coming to its doors. The word of mouth from companies to other companies about their experience with Palantir is extremely good. So the work does itself thereafter. That is the importance, guys, of listening to your customers and then giving them the best possible client experience. And they have clients all over the place, guys. They work with Panasonic, they work with Anduril, right? Tons and tons and tons of companies. So look at this. I'll show you just a few key things, right? You have a lot of different quotes from anywhere from Conagra, Nebraska Medicine, Clarios, right? Everybody's saying that they have extremely good metrics when you talk about what Palantir is doing for the company. Here is from Anduril. If you guys don't know what Anduril does, you don't need to take it from me. Anduril is a defense company overall, guys. They manufacture unmanned aerial devices, right? So Anduril, very strong company. Look what they say. By using the software, we've seen up to 200x efficiency, not 2-3x, not 4-5x, 200x efficiency to gain in our ability to anticipate and respond to supply shortages. Those are not small gains, guys. Those make a difference to anybody's bottom line. So moving forward here you have one of the dev cons that they've been doing, right? Usually they host other boot camps. They used to call them boot camps. Now they're hosting larger events such as dev cons, where they show you how to apply the software and where they have it's basically a developer conference, right? Where all these developers from various corporations come in and learn how to use Palantir's software and also give feedback to the company as how it's a symbiotic relationship, right? Palantir shows people how to use it. Then when people see things that can be benefited or maybe a better user interface for them, well, it's a kind of a feeding process, right? They go back and forth and they improve the product for them. So transforming the speed and the scale of the US government as well. They also do this for Rio Tinto, optimizing in terms of, unmanned trains running 24/7. So many different things, guys, so many different things. We've already went around some of the numbers, but the numbers are fine. But when you have to give context to the numbers as well. Why are they growing this rapidly? It's because of their client experience. It makes it to be an extremely sticky product. Now, here's your net income, guys. Net income is increasing rapidly. As a matter of fact, this is their second quarter in a row at 20% net income margins. Now, the true net income margins are without the SAR. If you guys don't know what SARs are, guys, this is a fancy term to say that this is a form of performance-based stock plans. When the stock price rises above a certain dollar amount, in this case it was $70, there's a certain portion of employees who can have access to shares to possibly sell them on the open market. The company recognizes that as an expense, okay? So these are just performance-based stock shares, not based on the performance of the company looking for certain revenue metrics or EPS metrics. This is purely an SAR in terms of stock performance plans is purely the share price. When it crosses a certain share price, the lockup period is done and people can have access to those shares and the company records it as an expense. It does not impact free cash flow. It does not impact margins. It affects GAAP margins, but it does not affect non-GAAP margins, which is what the company looks at all the time. Same thing for operating income. You can see it go down here, but without those, without that performance-based stock plan, well, unfortunately, or it would be a lot higher, right? Essentially, moving on forward, U.S. revenue growth, that is staggering. Commercial and government growth, staggering as well. So, I mean, everything is just going to reiterate the point that I'm making. All lines of business for Palantir are going up. Revenue scaling nice, EPS is scaling nice, free cash flow is very, very strong in relation to the revenue. They do not have much debt at all. We can take a look at the debt profile of the company and you guys will see it is very, very attractive right now. So the debt profile of the company, you will see that there's almost no debt whatsoever. Now they've built up a stockpile. You read it in their earnings of about $5 billion. It's not reflected on TradingView just yet for 2024, but this will be reflected in just a few short days. They have almost no debt. They brought in over $1.5 billion in free cash flow this year, and they're sitting on $5 billion of cash. Balance sheet gets an A+ from me. Couple that with the fact that they're becoming more and more profitable. The last years, they were not profitable. These past few quarters, look at this net income ramp here. Starts at 12. Now it was 19.78 in the last few quarters. And same thing with this quarter as well, guys. Another 20% quarter for Palantir, looking extremely strong there. So all in all, guys, suffice to say, I'm not going to take you through every single one of these earnings slides. I think you can kind of gauge where the company is going. I wanted to share the competitive advantage of the company. But now, in terms of the valuation, what you guys want to know, is it a good idea to be buying Palantir all the way up here, guys, at 100? Sorry, I'm just looking for my hotkey there. Is it a good idea to buy Palantir all the way up here at 103? Well, yes and no, guys. It depends on your time horizon. Short term, maybe not. You're probably not going to see the X's that everybody is going to make you believe that you will be seeing, because at 103, guys, the company is currently worth $220 billion. This is a company worth $220 billion of valuation. However, even though the revenue was extremely strong, they are only a company bringing in roughly $3.7 billion of revenue. Now, this will increase substantially into the future. However, as it is right now, the stock is relatively expensive overall. They are growing revenue and EPS at extremely interesting clips right now. A matter of fact, I might think that this revenue growth number right here is low. The street thinks it's about 26%. I'm keeping it at 22 just to be a bit more conservative, because if a valuation makes sense with a conservative valuation, then it will make sense if you have a bull case at an extreme bull case as well. That being said, EPS is growing 28% per year. That is literally the street's expectation. So I'm not going to go over and above that. However, at 103 right now, they set at a forward PE of 219. I know 219 is expensive, but when you divide this number by their EPS growth rate, well, it's kind of still expensive. A 7.82 PEG. You rarely ever see PEG ratios in the market, even for the best tech companies, guys, of over 4. I'll give you an idea. There's an entire sector right now trading at almost 4 PEGs for extremely high growth companies such as CrowdStrike and such as Palo Alto Networks, right? These are all some of the cybersecurity plays, very strong companies. They're trading at 4 PEGs. Palantir is trading at almost an 8 PEG. This is the definition of extreme valuation, but sometimes extreme valuation to certain investors does not matter. Price to sales at 103, 62, guys. 62 is insane levels of price to sales ratio. By any metric in which you value Palantir, it is expensive. I don't care if you look all the way out to 2030, guys. The company is still expensive. So is it a good time, if you've never seen Palantir before, if you've been on the fence, is it a good time to FOMO up here? Well, this is where I reiterate, guys, only if you have a very long-term time horizon. I myself think that Palantir can eventually be a $400 or $500 billion tech company. They have the technology to do it. They have the niche to do it. They have the marketing skills to do it. They have the customer experience to do it. I have no doubt in my mind that you may be able to have a 2x in this company. But how fast will that 2x come? Will it come this year, or will it come possibly in the next 2, 3, 4, 5 years? That is something that nobody knows. $400 or $500 billion, some may argue that that's a light valuation, but that is a logical and reasonable price target. So my question to you, if you ask me, should I buy it here? My question to you is, how long is your time horizon? If your time horizon is in the next 3 months and you think you're going to see a 2x, probably not. I mean, anything can happen. Crazier things have happened, but probably not. I would be more keen on waiting for a possible pullback. Now, I know we were already here and it's easy to say, but that's just the way I trade. When we blast off here, you kind of want to see a little bit of a pullback as well. If you do retest maybe the 90s or the mid 80s, some people say it's not going to get there. I'm just saying if it does get there, I will possibly be interested in doing a little bit of a swing trade position myself. But overall, the stock is expensive right now. So swing trade from here, probably not. You probably want a little bit of a retest. Buying it for a long-term portfolio here all depends on your time horizon. If you have a 5 to 10 year time horizon and you say, Will, I like this company. I think it's going to be a $500 billion, trillion-dollar company. They have the tech, they have the personnel, they have the management team. No problem at all. But keep in mind, it is a long-term expansion thesis. So do not get disappointed or shaken out if the volatility is a lot over the next 3 to 6 months. Those are my takes on Palantir. We haven't covered it in a while, so that's why I went a little bit deeper on their earnings and spent a little bit more time on it, because I know this is one of the hottest stocks in the market right now. But once again, do not FOMO the tops, guys. If you have like $10,000 you want to buy Palantir with, slowly. Maybe we buy 2K tomorrow, and then in 2 weeks' time, no matter where the stock price is, you buy a little bit more. DCA, guys, just DCA over time. That way you're not going all in on one price and not focusing, oh no, I bought it and now it's down, right? So moving on further, let's get into some technicals, shall we? So moving into the SPY right now. So the SPY, not looking the worst, all things considered. That being said, we are right now in a daily downtrend. We do have a nice little bounce, but a bounce is only a bounce. We could just be looking for a lower high and then maybe revisit the lows if tomorrow's market activity is not that bullish. As a matter of fact, the futures are down right now, so we will see what we get. If we continue the slide here in the markets on SPY, below support is 585 down to about 580. Now, what do the bulls need to do to reverse this? You need to get a nicer bounce than this. This bounce is okay, but we are coming into resistance, which is 600 down to about 595. This whole little box right here is resistance. So until the bulls can give us an engulfing move, reset the daily uptrend, we cannot say the short-term pain is behind us just yet. As a matter of fact, the bulls are looking for a weekly higher low. At this point, anything above 575, looking for the weekly higher low for possible further trend continuation. So I'm not saying the pain is done. There is still a possibility of visiting this area down there, and I will remain a buyer of these markets. I think these short-term pain catalysts, short-term volatility catalysts are just that. Short term, the economy right now is strong. The jobs market is strong. Inflation is still largely under control. And so far, no tariffs until March 1st. So we will revisit those if at all they come into effect. And that is just the fact of the matter. The economy is strong. Forecast guidance for EPS growth on the SPY is extremely strong for this year as well. Bank earnings were good. Consumer is healthy right now. Tech earnings were also good. Point to growth in 2025. So I do not see any major red flags just yet. Are there a few little volatility events here and there and a few things we need to look out for? Absolutely. But overall, my bias in this market is still bullish. I am just patient on buying the dips. And that is that. Moving on to the Qs right now, down about 0.8%. The Qs also oscillating almost on the verge of losing the daily uptrend. 510. If you break 510 by tomorrow, that is officially a daily downtrend, and you are just going into further weekly consolidation. Now, good thing, guys, the bulls do have a decent amount of space on the weekly time frame. Let me just blow it up right here. It's anything above this guy, right? Anything above 500, just looking for a weekly higher low to reset into a weekly uptrend. This was a weekly downtrend. Now the bulls need to get the uptrend back. So they're looking for a baseline of support, but if you lose that daily by breaking down here, well, the bears are just going to have to cut a little bit deeper into this move, and we're probably heading to the lower end of support to this guy, which is roughly around 500 to 495. I do think this would be a tremendous buying opportunity, not only for the Qs, but everything that is in the Qs if they've been beaten down over the last few weeks. But overall, guys, we are holding this range. Look how many times you see it best on the future. Look how many times we have tested this range since Powell. How many times? Well, Powell, once thereafter, that's 1, 2, 3, 4, 5, and now 6 different times we have tested this location. The bulls seem to want to defend it extremely hard. We will see if that can last the test of time over the course of this week. Moving on to the XLF right now. So financials were down today, but they needed some consolidation, guys. This was one huge rally to the upside, and now the bulls are looking for the higher lows. They still have not reset the hourly uptrends just yet. We will see. As you can see, the move is topped out now. We have now lost officially the hourly uptrend. So if the hourly downtrend continues into tomorrow, we are still looking for our daily higher low. Anything above 47, looking for a higher low for possible further trend continuation. And if we lose too much ground, set up the lower high into lower low, well, just understand what the bulls are going for here, looking for the weekly reset of the uptrend, looking for a higher low. Anything above 47, looking for the retest and possibly run. Where could we maybe retest? 49 down to about 49.8 down to about $49. That's the 12 EMA at 49.8. And the support range down here is about 49. A little bit of a breakout, retest, and then reset of the weekly uptrend. That could be a likely scenario. So any dips on financials or credit cards, banks or credit cards, I will probably be a buyer. Moving into XLV Healthcare right now, still getting rejected at overhead resistance, which right now is about 147.50 on healthcare. That being said, we are not continuing the daily uptrend. You need a confirmed daily candle close above this region, and so far we are not getting it. On the flip side, if we break to the downside, 145.27, this would be a daily downtrend, and we would be going into a little bit of weekly consolidation. What are the bulls looking to do? We are looking to reverse this massive 3-4 month weekly downtrend. Nice engulfing move. Now you got to wait for the price action. We need a higher low for a higher high, otherwise known as, if I draw this, you guys might just see a cup and handle pattern. That is possibly what we're looking out for. So all that being said, the MACD is also crossing over, shows that the bulls have a lot of momentum right now, but can they convert into the weekly uptrend? That is something that we will get to see over the next 1 to 2 weeks. But overall, the sector is looking good. On any dips, I might be looking to position into some names that have been down a decent amount recently, such as NVO, possibly even Eli Lilly, even though they have earnings this week. A stock like AbbVie, which just had their earnings, which is off. If we get a retest and run of the 183, 180 level, that could possibly be a very interesting trade too. And if ever UNH makes its way back into the lower 500s, I may just choose to buy the dips there. So there are tons of plays on healthcare right now. You just got to know where to look. Moving on to semiconductors. So semiconductors also down 2% today. No secret there. The tariff news kind of got them down and down for a better part of the day, but at least they did not end at the lows of the session. They're coming into the 200-day moving average, which right now sits about 237. Below support range is 232 to about $220, and above resistance 260 to about 250. That being said, once again, it is a tale of being trapped between two levels. Trapped between overhead resistance and trapped in between below support. So what the bulls need to do is we need to reset this into a new daily uptrend. If you break the lows, however, 232, it is just continuation of the daily downtrend, and we look to see if the bulls down here can act as some final areas of defense until we get a daily confirmed uptrend. Until you see a daily confirmed uptrend, this is still the bear's game to play, so keep that in mind. My favorite way of playing this volatility and these drawdowns is by writing puts on my favorite stocks well under the market, and I'm using NVIDIA, Broadcom, and TSM whenever I can find them at decent discounts. Moving into the Russell right now, the IWM, not looking too bad, 1.17% to the downside. Overall, though, daily downtrend is officially underway. We have now broken down from the resistance area, 232 down to about $225. That being said, this area of resistance has been challenging for the bulls a few times over the past few years, that is for sure. And on the weekly, guys, well, the weekly bulls are rolling over a little bit. They still have a tiny little bit of space, though. Anything above 214, looking for a weekly higher low and try to make an attempt at getting through this resistance again. But obviously, when you have the tariff narratives, the inflation narratives, yields sticky for longer, it is very tough for the risk on small cap sector to run. However, if ever we do start revisiting the lower end of support down here, $216 to 208, that is where I may attempt another position, but we will see. As of right now, no position for me. Moving into the Dow Jones as well, the Dow Jones recovering okay today, but still down 0.28%. Now the Dow Jones is kind of like financials, huge move to the upside. Now we're looking for the higher low. I was telling you guys, how do you know when a move like this is finished? You have to lose the hourly uptrend, and lose the hourly top uptrend we indeed did. You can see that today. Clear loss of the hourly uptrend, and we also lost the short-term 12 and 26 moving averages. Suffice to say, consolidation is underway. We will see if that continues into tomorrow. One thing is for sure, we are looking for the daily higher lows. Anything pretty much above 41,900, looking for the daily higher lows for further trend continuation. If we come back too much and set up the daily downtrend over the next week of time, is it that big of a deal? No, that would just be weekly consolidation. And at this point, anything above 41.9 is still going to be looking for a weekly higher low for further trend continuation. This looks exactly like financials, guys. So if we want to know a retest location using the higher time frames, 43,300 down to about 40K. It is between the 12 and the 26 EMAs. And you can see that in the context of this 2-year rally from the Dow Jones, when we pull back between the 12 and 26 moving averages, it is synonymous with a decent buying opportunity. So when the bulls have a nice engulfing move like this and go to set the higher lows and they come down into here, we have an entry opportunity. The trade entry is here, the stop loss is there, and then we ride towards new all-time highs. That is how we take a risk-defined trade going for a weekly uptrend shift. Moving into that's pretty much everything. In terms of yields, they haven't really moved too much, but we are still on the watch for a breakdown in terms of yields. On the weekly, we still have this very clear weekly uptrend, which we have not gotten out of yet. the daily looks okay. The daily looks like it's massive head and shoulders, and it looks like it wants to roll over. However, guys, yields are going to move with so many different factors. We touched upon that over the weekend. And while we still have these tariff headlines, the inflation headline threat, and also interest rates higher for longer, and just overall uncertainty in the markets, yields can stay a little bit elevated. So we are on the watch for further downside, but it may take some time to actually get that big sweeping weekly downtrend and start reversing these monthly timeframes as well. This trade will move relatively slowly, and the bonds are just the opposite. So I am a fan of making an attempt at buying bonds here, but if we are swing trading this one and going for the reset of the weekly uptrend potentially, well, it stands to argue if the entry is here, the stop has to be below there, guys, because we are in a weekly downtrend, right? So if we're going for the reversal trade, this is the stop out area, because if we break this, we're just going lower. So I do not mind a trade here, but we have to be very patient with this trade as well. If we enter it, it may take a very long time to actually move in the direction and with the speed and size that you think it can. Now moving into crypto. So crypto, what a wild day. Last few days for crypto, guys. We covered this one on Saturday after the reaction to the tariffs on the crypto side, and it was not very good. But right now it's looking a lot less not good. It's looking not too bad right now, as a matter of fact. Look at how fast Bitcoin came down this morning. From yesterday close, Sunday, 7 p.m. to this morning, Bitcoin was down 6.5%. And then the bulls turned on the afterburners, guys. Look, here is from last night, Sunday, 9 p.m. Eastern. From Sunday to right now, 24 hours later, 12.38% swing on Bitcoin. I mean, some people say that Bitcoin doesn't have the volatility as it used to, and I say that as well, but some days it definitely does. That being said, we are now closed back above the $100,000 mark, and still, since we did not close any candles below this area, we came very close. We did not close a candle below my support box. I have not moved this, 97,500. Now we are closed back above. So yes, we were in the context of a daily downtrend. However, no candles were closed down below there. So we are still looking for the bulls to potentially put in a nice little rally and change the daily uptrend. So still using the support, 101 down to about 97. It was a hell of a buying opportunity this morning. If you knew what to look for, I did include it in my top 5 options play yesterday. So hopefully you guys were able to make the most and make the most of that and take advantage of that move. So as we can see, it came right down into our support range, which we were highlighting, 91,005 down to about 87,005. Support range is maintained, and so far have not lost any weekly structure. We are still in a tightening weekly range, close to the all-time highs, patiently awaiting the possible breakout. So great recovery by the bulls, but we will see what we can get. All I can say, guys, is it's very tough to predict Bitcoin. Eventually, I do have a bullish bias for the breakout. However, all I can say is if it comes back down here, I will buy again. Moving on to Ethereum. Ethereum had the craziest day that I've seen in a very long time, and that's saying something because I see a lot of crazy moves. Ethereum over the weekend, guys, Saturday from the tariffs to the lows, 40%, 35% to the downside. Just today, from yesterday night into this morning, 26% to the downside. Everything in crypto got absolutely destroyed, guys. You call that a liquidation event. Market makers were going hunting left and right. People were capitulating. The crypto timeline on Twitter was in absolute shambles. People literally hanging up their gloves for the fight that they've been having the last 1 year, saying it's over. It was a fun time, guys. I'll see you guys next cycle. It was bad. And usually when that happens, that's when you kind of know that the bottom is especially getting close, especially when you know that the economy is overall healthy. But the damage has been done on Ethereum. Daily downtrend, that is for sure. Huge take back by the bulls and closing within our range of support. 29 down to about $27. They flushed all the stops, all the leveraged traders were completely liquidated. And now you have a market that is roughly more in balance, but the damage was done. It is still a sweeping weekly downtrend. So now the bulls have to start everything from scratch. First things first, need a new daily uptrend. Then second, need to reverse into a weekly uptrend. And only then will you know that Ethereum is ready to end this monthly consolidation and make a move. Because as of right now, the last roughly 8-9 months have just been a very wide but sideways range. Now moving into, I like Ethereum down here. As a matter of fact, I have a position on Ethereum that I use the stock market for. Moving into our big tech names now, Apple. So Apple down 3.39, continuation from their earnings. Look at how much Apple has come down in the last few days, 8.5% to the downside, and we are still not even oversold on Apple. Just goes to show you, big bounce, and now they gave it all back. Where are we coming into right now? 225 down to about 215 is the area of support. Huge area of support for the bulls. Their earnings were okay, but they did highlight, guys, their earnings highlighted that indeed they have a problem with their iPhones. The iPhones are just not selling as much as they used to. People don't feel compelled enough to go into a big refresh cycle for the Apple devices. Apple Intelligence is good, it's fun in certain aspects, but does it truly change the iPhone experience? Well, as somebody, I don't know where it is, as somebody with the newest iPhone and Apple Intelligence on it, I can tell you guys, I don't really use it, and I was looking for it. I mean, the camera stuff is nice to help you identify things with the camera and everything like that. But if I had to compare between Google Intelligence on the Google phones and on the Samsung phones, the Google Gemini essentially, versus Apple Intelligence, I have to give it to Google, guys. Apple is just not on that tier just yet. So that being said, Apple, their earnings were okay. Other lines of businesses were doing well, but the iPhone sales, it's what's really holding this company back. You need to get a brand new S-curve of growth for the iPhones, and they're just not having it right now. That being said, if we pull back a little bit more, 200-day EMA is there at about 222. And if we really drop through this level, guys, I will be playing Apple in the lower $210 region. As of right now, though, the momentum, for the most part, since earnings is lost, and we are just back into the gulag. Overhead resistance, 237 to about 231, and now below support, 225 to about 224. So no clear defined trend right now. Trying to go for the weekly uptrend, but now just a tightening range. I am only interested in playing it if we come to the lower end of that range, which is around 215. Moving on to AMD right now. Well, AMD, it's tough to derive price action on AMD, guys. Why? Because they have earnings tomorrow after the bell. So that'll be very interesting, guys. I'll remind you the expected move on AMD. I have it up right here. The expected move is going to be roughly 7.85% in either direction. So I do not know where AMD is going to go throughout the day tomorrow, but one thing's for sure, they will move 7-8% after earnings. 8% to the upside would put us right about, let me do these lines for you guys, right about there, 124.83. And 8% to the downside would put us right around 104. Now, of course, it can go more than 8% or less than 8%, but I'm giving you guys general guidelines just so you see. If we go up 8%, we are still in the context of resistance, 132 down to about 120. So we're not going to make much progress at all. It will still be a sweeping weekly downtrend, and although a nice little move up will be nice, the bulls then need to reset a new daily uptrend and start making a move against these weekly lower highs and start setting in motion a new weekly uptrend. That takes time, but earnings could be a very good start to that whole reversal process. If we come down, I think it's literally going to be the max pain final flush for all of the advanced money destroyer shareholders out there. Everybody, if AMD earnings go down 8 to 10% tomorrow, guys, I swear to God, everybody's going to be in shambles. Everybody's going to liquidate this stock, capitulate on the stock, and that's when I actually think is the actual buying opportunity for this one. If you believe in the company and if you believe in the fundamental expansion of the business too, because I'm not going to buy dips on a company that is not improving their fundamentals as aggressively as AMD is. I think the market is getting this one wrong. We will see. I'm willing to take that risk, but keep in mind, it is always a situation of risk to reward. I think the reward right now is outweighing the risk, but I've never said that there is no risk. If they come down, where are they coming down into? Coming down into support, which is roughly right where we are now, 112 down to 100. If we break down into the low 100s, guys, it will be absolute panic, absolute capitulation. People will just give up on this stock, and that is where I will come in and start actually going a little bit heavy on AMD. I've been playing it here and there, on and off, made some good money so far. I have one small little leap contract, but if we come down there, I'll be going a lot heavier with a lot more time, and we will play this recovery story, guys, with a lot of time on those contracts. So tough to derive where AMD is going to go. All I'm going to say is if we come down, I'm looking to play it, and if we come to the upside, I need to see the weekly uptrend conversion before I'm going to be looking to play it more for the trend continuation. Moving on to Amazon right now, down about 0.11, but Amazon holding up really well in the grand scheme of how the markets were doing today. Amazon just holding highs. They have their earnings, guys, coming up on the Thursday session. Holding relative highs right now, not losing any trends. That being said, if we lose 232.56, that would be a daily downtrend. But I mean, we're so close to the level right now. It is a beautiful weekly uptrend as of right now. Gorgeous weekly uptrend. And we would just be looking for a weekly high or low. Anything at this point above 216, looking for a weekly higher low for further trend continuation. Now, there's not that many days before Amazon's earnings, and I do think that either we're going to blast off for earnings or we're just going to retest some levels of support. The one thing that I will say, though, is that I'm not going to play it before earnings that much. If anything, I will write a short put down here at about 215, but that is the extent of how I'm willing to play Amazon over this time. I do have long-term shares for my long-term portfolio, not selling a single one. I think Amazon's going to do fantastic this year. And the focus on Amazon, guys, if you want to know what Amazon is doing this year, yeah, AWS is nice. Yeah, their retail business is nice. Yeah, their pharmacy expansion is nice. And so many other lines of their business are very cool. However, what we need to be focusing on, guys, is Amazon is doing something that they've never done before. They're focusing on net margin improvements, EPS improvements, and free cash flow improvements. They have never done this, guys. They've been a top-line revenue growth company at all costs. They never cared about profits. They never cared about free cash flow. It was growing the top-line revenue of their business at any expense possible. Now they're shifting. Now they're turning into a free cash flow machine and an EPS monster and a net margin machine as well. So pay special attention to the expansion of the net margins. Not enough people talk about this shift in Amazon's business profile, but that is why it is one to watch and one of my favorite stocks for the next 2 years. Moving into Google right now, Google down about 1.44 today. Not that bad of a day for Google, all things considered, still very close to the all-time high. Daily uptrend is clear as day right now, looking for a higher low for possible further trend expansion. The support fallback area is 199. Let's call it $200 down to about 197 at the top end of the range here. Nice little good old breakout, retest, and possibly run. That would be the case. However, they have earnings tomorrow, guys. So tough to derive whether or not they're going to respect this or flush it because they have earnings tomorrow. So I'll give you the expected move on Google, and I'll tell you how I'm playing this one. So the expected move for Google, real quick, is going to be 5.51 to up or to the downside. So 5.51 to the downside is going to be all the way back down here, potentially 190 to about 188. This is that big support range down there, bottom end of this range. And to the upside, if they really beat, they'll probably be sitting around 215, 220, all the way up there, 5-6% to the upside, right? So the way that I'm playing Google, I mean, you guys already know that I do have some leap exposure in the form of a debit spread, and I also have some long-term portfolio shares as well. So I am already in to the upside. However, if I'm making a play to the downside, no, I'm not buying puts. I'm writing puts. I am selling puts probably in the mid 180s. If you want to take a look at the contracts right here for Google, for me to give you an idea, I usually like to do what they call the 2 times expected move. If the expected move is 5% to the downside, I will go 10%, giving myself a wide margin of error. As you can see, the 10% is roughly, let's call it 182. I'll even be a little bit cheeky and allow myself to go up to 185. And as you can see right here, the strike prices for Google, 182 is about 71 cents for Friday. 185s are paying about 97 cents. So that is actually very close to our 0.5% rule, and I would not mind being assigned there at 185 or lower. So the moral of the story is I will be writing puts here, and if it comes down there, I will be buying the shares gladly because this is the area that I love buying them in, and the price of the company right now is very cheap at 196, where they're roughly right now. They're trading about a 1.43 peg while growing revenue and EPS at very nice clips. So that is the preview for Google and how I am going to play that. For the long side, I can't tell you guys buy leaps, buy calls, or nothing like that. It is entirely up to you. All I can tell you guys is that I am already into the long side as well. So however you decide to play it is completely up to you. I think they should do well, however, just don't take that to the bank because you guys saw with Microsoft. Microsoft did well, but still went down 6%. Meta up about 1.2% today. Nothing to see here, guys. Meta just, recapturing some of the losses that they had early in the morning. Beautiful daily uptrend, guys. Still looking for the daily higher low. If Meta keeps dropping, looking for the daily higher low for a possible further trend continuation. Where could we come back into? Possibly the 12 EMA down there at about 660. That's the first line touch for the bulls. On the weekly as well, even if we give back this entire move and go into a daily downtrend, which would be surprising, but always possible, we are just looking for a weekly higher low. Anything above 590 is going to be looking for a weekly higher low for further trend continuation. A good old little breakout, retest, and possibly run, that could be an interesting trade, but that trade would only be freed up if Meta starts retesting 650 to 640. I would be interested in playing this one, but as of right now, it has ran away. My long-term shares are loving it, but I just do not see a compelling argument for a swing trade long from here. Can it work and can Meta go higher? Yes, but the risk reward, guys, is always what we need to be cognizant of. And you want to get a better risk reward profile than this, just buying blindly at the all-time highs. If you have a long enough time horizon, if you want to buy here and hold for the next 1 to 2 years and you don't care about short-term swings, by all means. But if we're looking for like 30-day call options here, you may want to see a little bit of a retest here before trying that trade as you get access to much better levels and closer areas of support. Moving on to Microsoft right now. Give me a very brief moment. So Microsoft down about 1%. The slide on Microsoft continues. But in the grand scheme of things, have we lost any major levels? Not really, guys, right? So Microsoft, unfortunately, coming undone after earnings, and the decline simply continues below their 200-day EMA right now, which I will gladly make brighter because even I can't see this. So my apologies for that, guys. So the 200-day EMA is right up here at about $420, let's call it. We are now below that, but we can see that Microsoft in the past has not lasted below the 200-day EMA for more than just a few short days. We will see if this time is different. That being said, support below us is roughly 407 down to about 390. A tremendous location for either writing puts or buying the dip in terms of shares if you have a long-term portfolio or want to make a little bit of a swing trade attempt on Microsoft. We covered their earnings. The fundamentals of the business are absolutely fantastic right now, and they've been accumulating here while improving fundamentals for over a year's worth of trade. I'm still a very big fan of buying the dip levels here, but let's not get it twisted. We have to also say things how they are. We have now lost the weekly uptrend, weekly downtrend, but all in all, we're still just trapped in a wide range of consolidation. So Microsoft bulls have to start everything from scratch. Step number 1, give me a nice daily bounce. Step number 2, confirm a daily uptrend with that bounce, and then we can talk about some possible weekly expansion, but you need to see it on the daily timeframes first. That's okay though, the whole time Microsoft is down here, and we'll be making more and more swing trade attempts on them. Moving into Netflix, Netflix up about 0.22% today, still maintaining the top end of the range, guys. And whatever happens, guys, tariffs, Jerome Powell, I mean, for all intents and purposes, half of the world could possibly just go into an ice age and Netflix would probably just still be holding this range. Very funny how this price action is going, but just goes to show you what a solid company it is, and people just do not want to get rid of this stock. Now, below us stands the support, temporary support, 955. If you break below that, daily downtrend, but at least, guys, the bulls have a this is like an inception box. Let me erase one of those, my bad. They have very big support below us, 935 down to about 900. I'm a big fan of looking for a retest trade. Daily downtrend breakdown would just be looking for a weekly higher low for further trend continuation. And now that we've let consolidation happen on this chart, the 12 EMA is curling this little yellow line right there, which I agree is not bright enough. Let me just make all of these as bright as they used to be. Somehow I deleted my indicators and now I can't get them back. Well, let me actually do it really, really fast, guys. I don't want to just keep you guys here for too long because I know I don't make the shortest videos. So thank you very much for your patience. So moving on further, let me just delete the 50 because I use the 50 sometimes, but whatever. Let me leave it there. Anyways, looking for the weekly higher lows and looking for the weekly chart expansion. So 930 to 900, if we get a retest of this, could be interesting for a swing trade. It's just buying up here, not offering the best risk reward. I want the retest, give me a better level, and then I might make the attempt. But all in all, Netflix bulls looking very strong. Moving on to NVIDIA right now. So NVIDIA down about 2.84%. Not the worst day for NVIDIA, but also not the best day too. They could have been down a lot more, 5, 6, 7%, but they were not. That being said, daily downtrend is now clear as day. Lower lows are set into support, which is 118 down to about 111 for NVIDIA. Now we are below the 200-day moving average, and the next area of support is all the way down here, 105 to 95. This is where I am writing short puts at the current time and where I would not mind buying more stock, but also this is here I haven't really committed to any more leap contracts. You guys know that I have a leap contract here. The next one is coming in here, and I'll be using June 2026 or January 2027. A ton of time on those contracts to get through some of these short-term headwinds. That being said, I do think 105 to 90 is a tremendous area to buy some stock, but right now is kind of a middle ground, right? We can make some small attempts right here, but the risk reward is equidistant. Rares or take profit. Take profit is resistance here, 125 to 130 from here. Where's your risk? Well, your risk is all the way down there into support. It is an equidistant risk reward. There's as much space to the upside as to the downside if you're trading the technicals. That being said, that's why it's not my favorite area. Can we make some longer term attempts here and just nibble a little bit for longer term? Yes. Short term though, not the best. And for very long term, I want the best possible price. So down there is a decent area. So NVIDIA, unfortunately, losing the daily uptrend, losing the weekly uptrend as well, and now just into a nice form of monthly consolidation, right into the 12 EMA, cooling off the monthly timeframes. And I know what you see here. You see the MACD crossing and you think the stock is going to do this, right? Well, probably not, right? That's happened a few times where we've kind of gotten weaker on the MACD and it's found a way to resolve itself until I see a pure cross at a negative February and March. Not ready to call for the actual monthly downtrend formation. As of right now, just looking for a monthly higher low for possible further trend continuation. And NVIDIA has such good numbers for 2025. I will be highly surprised if their stock just goes down all year. Moving into Tesla right now, down 5.17%. Not that bad of a day. Could have been a lot worse because auto manufacturers, they get hit hard when it's talk about tariffs, right? Look at GM and look at Ford. So it's not Tesla's fault today. They were just brought down with the overall sector in which they operate in. That being said, daily downtrend, yes, but desperately holding on clutch to the 375 lows. If they lose and close a candle below 375, suffice to say that support zone is lost. You already have the daily downtrend, so now it's up to the bulls. Can they get this back in one single day and start erasing this daily downtrend and get the uptrend back? We will keep an eye, but as of right now, it is very, very on the verge of being broken. That being said, also on the weekly, if you close a candle below 375 on the weekly, that is weekly downtrend. We are heading one level lower, 360 to 330, at which time we will reevaluate this stock around the 26 EMA. You can see on the weekly here, curling over on the MACD. Actually, it has crossed. So we will see if the bulls lose this, we are dropping a level, at which point I will be making some attempts on Tesla, some heavier attempts at least. But as of right now, the bulls are holding on to this last line of defense, which I'll remind you are the previous all-time highs, looking for the breakout of those highs, the retest of these highs as support, looking for the candle up leg. We'll see if we get it, guys, but the bulls need to recapture short-term daily control if you want to know that that move is going to happen. And lastly, moving on to Palantir. Well, Palantir is all the way up here at $1,000. So Palantir is going to open tomorrow at $400. So that being said, we're looking for a retest. So it'll have to come. No, I'm just kidding, guys. Anyways, let's be serious here because we do serious analysis on this channel. Congratulations, by the way, to all Palantir shareholders that have held the stock this entire time, guys. Do not feel bad about selling. That's the last thing I want to hear from any one of you guys. I feel bad. I sold some here. I sold some here. I sold some here. That's perfectly fine. If you bought in all the way back there, guys, it's perfectly fine. Take your profits. The company is somewhat overvalued right now. You made a lot of money. Never feel any shame about selling, guys. No matter what anybody says, you took profits. You managed the risk before earnings, right? You did the right thing. So no problem at all. That being said, Palantir, guys, going to have a huge gap up here like they had last time. I do not know if they're going to gap and run further or if they're going to gap and just consolidate, just like Netflix did after their earnings, yeah? So we will see what we get for Palantir, but one thing's for sure, if I do want to trade, I do want to see some consolidation to have access to these levels as a line of defense and more of a basing out of support to come back down into. We will see if we can get it or whether or not the bulls are just going to hover up here and then put in a new leg. But fantastic job by Palantir. Not willing to call it just yet. I will let this one level out for a few upcoming days, and then we can derive some potential trade opportunities from there. And then lastly, SOFI. SOFI down about 2.41 today. Not the worst day for SOFI, but not the best either. They are currently still in the support range, 16 down to about $14. Daily downtrend, yes, this is true, in the context as well of a weekly consolidation phase. The higher lows are set anything above 1360, looking for a weekly higher low to try and go for weekly uptrend continuation. We will see if we get it or if we just get trapped in this range of resistance and support at the same time, similar to how we got trapped all the entire month of December and January. That will be good consolidation, healthy consolidation for the stock, using the former support areas around that zone to kind of find a base. Where do I like buying SOFI? I would not mind buying SOFI more around the $14 to $13 range. So I will be looking to sell some more puts down there. And if I get assigned, no problem, I will gladly take the shares. So overall, SOFI, we need to get a new daily engulfing move and a recapture of the trend to the bulls if you want to see this weekly consolidation be put to an end and start going for those $18, $20 targets. But overall, the stock is looking good, whether you look at it on a monthly time frame, just looking for the higher lows for expansion, the weekly time frame, higher lows for expansion, or just a tightening range, which is fine as well. And the daily, not looking the worst, right? They still do have a chance to recapture and run to the upside. So SOFI not looking too bad, but I am a buyer if we do dip down a little bit lower. So that is everything for our stock market review, guys. Hopefully you guys appreciated that. And if we're going to take a look at the trades right now for my portfolio, let's do it for a few short minutes in terms of a recap. So before I show you the portfolio, there is one trade that I took that is no longer there because it was an intraday trade. We went with an Ethereum trade very early in the morning and we closed it in 2 hours. So you'll see that one right here. We went with the Ethereum, short put the wheel, 31 cents for the $4 strike on ETH this morning. This was such a funny trade, guys. I mean, ETH was down. I mean, look at this gap down open. This is like a 40% gap down, yeah? 40%, 45% gap down on Ethereum, 2 times leverage. They were right in here at $4, literally almost close to the open. I mean, you guys can see the timestamp, right? 9:40. We went with the $4 puts literally at the money because ETH was like $2,200, $2,300, guys. Right? That's the equivalent of where it was down there on ETH at least. $4 puts for 30 cents. It was a no-brainer, guys. 1 week of time, literally 4 days worth of time, and you're getting almost 8%. That is a fantastic ROI opportunity. It gives you a break even at 3.7 if assigned. So I went with it. But did I go heavy? No, I went with one contract because at the depths of the morning, you did not know there was going to be tariff resolution early. So that's why I said yesterday, there are going to be some nice dips, guys, but go small and be methodical with your buys. I was willing to go a lot heavier, but maybe over the next coming week or 2 weeks, if the markets continue diving, you want to go in small and periodically and build the position up, right? So I only got one contract off, which is fine because we didn't know that the resolution was coming. It's very easy to look at the charts in hindsight now that it's happened and say, oh, well, you should have bought more. At the time, everything was bright red, guys. Nobody knew. So you have to make the best with the information that's available and bid, but bid small within your means and within proper risk management parameters. So we were able to open these for 30 cents and we closed them literally 2 hours later, or right here at about 15 cents. So 50% realized from the contract in one single day. Other than that, we did have a lot of other trades that I fired off at the same time, which I will show you right now. Okay, so here we have the account, guys, and my apologies. I always seem to film these videos when Interactive Brokers is like refreshing and updating their website. So unfortunately, all of my call debit spreads say 0, but they're not actually 0. If you want to actually see them, you can go back to Friday's video. They haven't really moved much, and I have not touched them. I'll just inform you guys of the new positions that we took today. So the new position, one of them is AMD for earnings when they dropped today. I threw in a 95 put order, but we got about 32 cents for those. I'm willing to hold those into earnings, and if we do get assigned, I will be holding those shares and looking to make a decent amount of premium on those. In terms of the morning dips, we bought Bitcoin as well. BITX 35 short puts for about 3 weeks worth of time. We got about 54 cents on those, which is about 1.5% per week for the next 3 weeks. 0.5% per week. And you can see that was a very profitable endeavor. They are now already 50% profitable. So I would not be surprised if we can even close these over the course of the week. That is what I mean when sometimes we go longer in terms of days to expiry. And look how conservative I went with BITX. I was telling you guys this in yesterday's top 5 options. You do not need to play this one too close. I went all the way down here with the volatility, all the way down there at the depths of the morning, even after the morning sell-off. That would have been an additional drawdown of 31%, meaning it would have been an additional drawdown of 15% on Bitcoin from now until February 21st, which would put me at 77,000. I would be a buyer of Bitcoin down there at 77K. That is why I chose that option. So you may find it too conservative, but there's a way to play these 2 and 3 times leverage trades that does not entail being super close to the money and try to make as much money as possible on these options. We can play them in a conservative fashion and still make our desired minimums. Just an idea. Elf Beauty as well. Elf was down 6% today. They've been having their fair share of problems. This is an earnings trade that I fired off. 71 short puts for Friday. They have earnings on Thursday. We got 44 cents. I will be a buyer of Elf at 71 if they come down there. I don't think they're going to come down there, but if they do, I am ready with an option. You can see how much premium there was on these strikes. 44 cents. Now, here's the remainder ETHs. I've had these for the last week and a half. I'm still keeping inside of them at $5 strike. If I get assigned, no problem at all. The other newer trades for today In terms of, we got some Microsoft as well. Microsoft U, which is 2x Microsoft leverage, $34 puts for about 45 cents. We got those for 3 weeks worth of time as well, roughly about 0.5% per week, identical fashion to BITX. And that would be all the way down there, which would roughly be about 390, 385 on Microsoft. I'm a buyer on Microsoft at 390, 385, so I added. I have the big Microsoft positions, but for those of you who have smaller accounts, this is also an interesting proposition. Just try not to play it a little bit too close for comfort, right? When you're playing these 2x leveraged ones. Other than that, I also have 2 of these contracts, a 35 put as well. I was sure I canceled it. Apparently not. So now I have 2 Microsoft positions that I did not even know about. I'm just kidding, guys. I have 2 of them right here, one for the 35s, one for the 34s, just adding more to the Microsoft position overall. Moving on, we also have, did we do anything else? Still the NVIDIA 105s for Friday. Did not touch those. I've had this since last week, not touching them. If I get assigned at 105, perfectly fine. We also have Pepsi. Pepsi has earnings tomorrow before the open. Right? So we're going to be doing some Pepsis as well. 2 times the expected move, 6% away at the actual lows that Pepsi has been in the last few weeks, 142. If I get assigned there, I would not mind. Pepsi's a very solid company, and it is a very, very solid area of support for the company. So we'll see what happens with Pepsi tomorrow. Palantir, I played them for earnings too. $60 short put. Some of you may thought that was a bit too conservative. I'm fine with it, guys. I get to collect a nice, cool little $20 and do whatever I want with that thereafter. So we get to collect all that premium, another win in our pockets. PayPal as well, 2 times the expected move. PayPal, I went with the $76 strike leading into their earnings. $76 strike is all the way down here around the 200-day EMA and within the confines of this very large area of support. That is how I like to play this. 2 times the expected earnings move and into a big area of support. We will see what happens with this PayPal contract tomorrow. Other than that, we also covered up the SOFI shares we got assigned last week at 16. We wrote some covered calls at 16 for about 33 cents for 2 weeks of time. 33 cents, that is roughly 16 times 2. Perfect. I get 1% every week for the next 2 weeks of time. That is within my minimums, so I'm happy with that. And other than that, guys, we wrote some Tesla, TSLA 2 times leverage when Tesla was down 5% today, $19 strike for the Friday expiry. We got 13 cents, which is above our 0.5% rule. I brought this one up yesterday in the top 5 options video as well. No need to play this super close, guys. I am way all the way down here at $19. That will require a dip on TSLL of 21%. TSLL is 2 times Tesla, so Tesla would need to come down 11% from their already dropped price of 5% today. It is an unlikely scenario, but if it does come down, I would be a buyer down here because this would be Tesla roughly 350-ish, okay? So we only have one small little contract. If Tesla does drop more, I will add to this position, but as of right now, all of these trades were done for the most part in the early portion of the morning when the markets were still bright red. That's why the positions are so small. I did not bite off more than I was willing to chew while the tariff uncertainty was still front and center and when the markets were bright red and breaking support levels all over the place. So it's been a very profitable day for us. We got some nice bounces thereafter, but the job is not done, guys. I'm happy with all the levels that I locked in, but we are not out of the woods just yet. So I will maintain this as we currently stand, and I still do have a ton of buying power to go shopping for any more dips that happen over the course of the week. So keep that in mind. So that is everything for today's video, guys. Hopefully you enjoyed it. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing if you're new. We do these video recaps every Monday through Friday after the close. And lastly, if you have any questions, always feel free to reach out down below. Anything you want, if you want my opinion on a stock or an option or the overall macro environment right now with tariffs, inflation, anything you want, we can have a nice discussion down below in the comments section. And in the event that you guys want all of these trades in real time, these are all the trades since the inception of the Discord. This is last week's performance. All the green check marks are wins. The red little boxes are tiny little losses. I'll show you all the trades since the inception of the Discord. We do everything. We do the short put, the wheel strategy, right? Put credit spreads, call debit spreads, earnings plays, call options, leap call options, long-term portfolio trades, and everything in between. If any of that interests you, the link to the description is always down below. Of course, we also do private morning live streams Monday through Friday for about an hour and a half, 2 hours every single day, where I trade live and take all of your questions on your stocks, your options, and give you my opinions on them with the charts as well. And thereafter, guys, in the event you cannot attend the live streams, They are always recorded, and you can also ask me your questions in our chat rooms all throughout the day, and I'm always very, very fast to respond to any and all questions. Additionally, we also have a private video section where I give advanced option strategies that I do not share on YouTube, some large account strategies there as well, and some psychology videos into how you can improve your trades, managing wins, managing losses, how to grow accounts. All of that is private to our Discord section. And we also do, I also share all of my watch list, guys, my options watch list, my large account wheel watch list, my high quality, high conviction stock watch list, all the watch lists, and also all the technical analysis. Whenever you guys see me do technical analysis on Tesla, Palantir, anything that has support resistance boxes, you can literally just copy my charts, and all the support resistance and any technical analysis levels, they just get pasted onto your charts. And all of the annotations you guys ever see me do on over 100+ companies that I analyze, you guys all get my annotations just with a click of a button, just copying my chart layouts. If any of that interests you, the link to the Discord is down below. And if not, well, I guess I'll see you back on the channel, guys. So take care. Pleasure as always. Hope you had a good day today. I will see you tomorrow after the close. Big day tomorrow, guys. Tomorrow, we have AMD, Alphabet, PayPal, Spotify, Pfizer, Chipotle in the after hours too, and so many more. And then Uber on the Wednesday pre-market session as well. So it should be a very nice next few days in terms of earnings. And then the big one, of course, on the Thursday session is Amazon. So should be a very interesting week. Keep your eyes peeled and keep your buying power fresh. That's it for me, guys. Take care. Pleasure as always, and peace.